If you can't beat 'em, then you pop 'em. You can't man 'em, then you mop 'em. You can't stand 'em, then you drop 'em. You pop 'em, 'cause we pop 'em like over red and vodka. C3, okay, a millionaire. I'm a young money millionaire.
Welcome back to Monday Morning Mining. We have Jordan Guess, co-founder of Bitment, and also runs a tax CPA firm as well. And we also have my esteemed colleague, Matt Aggie, here as well. Matt, great to see you. We're running a little late. We were getting to know Jordan a little more before we hopped on the show, but shortened week here, with crypto. We'll stay open, but shortened week for the TradFi markets. Jordan, thanks for coming on. Tell us a little about yourself.
Sure. Thanks for having me. Yeah, I'm Jordan Guess. I'm out of Kentucky and got into Bitcoin probably about 2020 and worked it into my CPA firm over the years and kind of identified that it's a bit of a mess trying to track Bitcoin denominated transactions alongside, fiat. And so we ended up spinning up a software company about a year ago called Bitment. It's essentially a QuickBooks replacement that also does all of your cost basis and tax reporting inside of one platform. A lot of clients we'd see using QuickBooks alongside something like a CoinTracker, Coinly. And so we were like, why don't we do all of this in a double entry accounting software? That's cleanest for us on the accounting firm side. And honestly, we think that it's easy enough to teach people how to do it as well. So we can get into that. I've been running the firm now since 2019, and then we're actually in the middle of a merger with a firm out of Nashville called Satoshi Pacioli, and they're a Bitcoin focused CPA firm. Work with a lot of startups in the space, a lot of just Bitcoiners who've been holding for a long time, and so this year's been a busy year, but it's been fun as well. And then we got the big beautiful bill that passed in July, and we've had a lot of work to do since then. As I'm sure we'll get into, we've partnered up with a lot of hosted mining solutions. They have a lot of clients that they're either bringing on as new clients or folks that are adding rigs to their setup in order to take advantage of all the tax benefits. And so I told my wife I'm not really supposed to be working at least after Tuesday. But I don't know if I'm going to be able to hold to that, dependent upon all of the mining questions that probably will come in that last week. So we'll see. So
awesome. Yeah. So this is a mining show, right? So we want to talk about kind of the mining aspect of it. But I guess before we dive deep into that, for people who may not be aware of just general tax treatment of Bitcoin, how it's looked at by the government, can you just walk us through a high level, like what classification is Bitcoin from a taxation perspective, and how should people think about the tax implications at a high level?
Yeah, no, that's a great question. Great place, honestly, to start to make sure that we bring everyone up to speed and everyone's at the same starting place. So the IRS in 2014 classified Bitcoin and digital assets broadly as property. And so essentially all that means is that from a practical standpoint, if you are mining Bitcoin right this moment, you have to recognize the income at the dollar value you received it. And then you also, if and when you go to dispose any of that Bitcoin to cover OpEx or buy more machines, whatever it might look like for your model, you have to either recognize a gain or loss on the sale of that Bitcoin. And so, that it gets a little tricky, right? Especially if the price is fluctuating. I always point to the example, if anyone remembers, going back to when some of the NFL players took some of their salary in Bitcoin back in like 22 or something. And
Russell Okung was one of them.
Yeah. I mean, I think it's a little bit tongue in cheek. Like, I really like that they did that, but if you do it on the wrong timing, you can kind of get screwed on the tax side. Because, for example, and what was the other guy? The wideout? I forget his name, but anyways, like he took it, and they're already in a high tax bracket, so they're already losing, depending on the state, maybe 45-50% of their salary goes to taxes anyways. And then if you have a drawdown in Bitcoin and you didn't convert any of it to save for taxes, you kind of got screwed in that scenario, because you had to say your salary was $1 million. You're getting taxed on $1 million, even if the underlying asset, when it comes tax time, is 50% down from its all-time high. So there's a lot of planning that goes into it, especially if you know that you either need to sell Bitcoin to cover really any obligations, be it operations or taxes. So that's where we come in play. It's just help people have clean books to begin with in the USD, and I would say everything's USD denominated for the most part for that, and then help them plan for the future and have a balanced balance sheet of like, here's what we're holding in Bitcoin, here's what we're having to hold away in cash.
Nice. No, that's great, man. So it's funny. I was telling you before we joined that my dad is a CPA, and so it's always interesting to hear. He's going through all the continuing education they have to do, and he says, this year it was all about all the new tax laws coming up. So like 26 is like a transitionary year, effectively, like where you still get forgiveness if you you're supposed to report certain things, I guess. I don't know, I'm paraphrasing, but he said he also started hearing about stable coins now and all the other stuff. Like, it's all coming down the pipe now. But why don't you what's going on and what is coming in 26 that's different than 25 when it comes to tax reporting for Bitcoin?
Yeah. Well, and now that we're getting into a little of the weeds, I should do my, very quick disclaimer. Nothing that we talk about, constitutes official like tax advice. It doesn't create a client tax advisor relationship. Just covering. If I don't do that, my attorney is probably going to give me shoot me a text or something, to be like, go back and do that. So, but yeah, to look out into the future, well, the big beautiful bill went retroactive back to January 19th of this year. So a lot of the changes actually are taking place this year. The high level, just from a broad standpoint, is actually a lot of things are staying the same. Otherwise, we would have gone back to pre-2017 tax rates. For example, the top tax rate would have gone from 37 to 39.5, or 0.6. But like from a Bitcoin standpoint, I mean, the bonus depreciation is the main story, that at least that I've seen. You might be referencing like the whole safe harbor rules that were like talked about pretty heavy last year, especially during the administration change, and then it ping-ponged back and forth on like, is this real, is it not? And yes, our understanding is it's still not being enforced, where people need to have all their cost basis in order.
Yeah, that's exactly. So that's exactly where I was going, is this year you get, so there's new forms, there's new, and then this year is the last year without, so similar to equities, when they brought that in, I forget how many years ago, but they made you report, you used to only have to report one side of it. Mm-hmm. And then we all know what happens. And so then they said, okay, you got to report both sides. Well, I think the same thing's gone on in crypto.
Yeah. You're saying for the cost basis specifically. Yeah. Well, and it's really important because the IRS really is getting, they're being more hardcore on, hey, if you don't have good records, we're going to force you into a FIFO cost basis method, which is first in, first out, which is generally, if you have older lots of Bitcoin that are lower cost basis, that's generally a worse outcome from the tax perspective. So then the question becomes, sorry, my light is on a motion sensor. I'm like trying to get the guys to fix that. Then it becomes a matter of, okay, so you can use FIFO, but you can also use specific identification. And the IRS has, I would say, fairly strict guidelines for being able to use that. And if anyone's ever used like LIFO or HIFO in order
Mm-hmm.
to categorize, those are essentially you're just doing specific identification. But I would say it's probably more important than ever to really make sure that all of that is in place. So even though the safe harbor rules have kind of gone away in terms of, oh, this is like something you really have to do, we've been encouraging clients all year to just do it. I mean, it really would be
Mm-hmm.
helpful from a planning standpoint to know what all your lots or what the cost basis are, so that we can do really good planning for, hey, we need to sell this Bitcoin. Okay, we're going to use this lot for that. We're going to donate this Bitcoin to a DAF or to a 501c3. Okay, we're going to use this lower basis lot because we don't have to pay the taxes on that donation. So, obviously, like, plug for our software, but I mean, that's why we built the software, right? Is like, we
Right.
really want clean. We don't want just clean cost basis records. It's also, I want something that I can reconcile against using the blockchain, which is like something I really could not figure out how to do using something like CoinTracker or Coinly. At the end of the day, we're accountants. We want it to tie out. And if I have unallocated lots, why is that? And
Yeah.
where it really comes into play for people is like, you're going to get that, like you mentioned, you get the 1099 digital asset DA form. A lot of them are not going to have either a cost basis on there, or it's going to be wrong. And so that's where you're going to have to take it upon yourself as a Bitcoiner to say, no, this is the cost basis that I'm reporting, and here's why.
Yeah.
So I kind of wanted to run through a little bit of a scenario with you. So let's say you got a group of people. We've talked to previous guests on the show about opportunities out in, let's say, West Texas to to get some property and mine some Bitcoin on flare gas. So let's say you have a group of people who want to get into that, and they've heard about the bonus depreciation advantages and things like that. Like what should they be aware of? Like what should they know when they get started? I mean, you mentioned it's treated as property. It's good. You win a block, you're going to be taxed at fair value on that day, according to the fair value. Are most people still liquidating their Bitcoin to cover operating expenses, or are they holding some? And like, how should people think about approaching that problem as they get started into a mining operation?
Yeah. Well, the things out in West Texas are really interesting, mainly because the cost of electricity. My understanding, I'm not a landman, but it seems like that whole model is that your electricity is basically zero cost, right? So that's extremely helpful, and should boost your bottom line just generally. Um, but one of the big things that we run into is this whole active participation versus passive, and it's very much in the weeds. Again, speak with your qualified tax advisor to really get a good sense for your specific situation. But the high level overview of that is, if the IRS deems the activity to be passive, then you're capped at how much you can take in losses against other income. And for a lot of Bitcoiners, the reason that they're looking into this strategy, that we've seen at least, is uh, we see some of the West Texas stuff. We see a lot of just high W-2 earners that are going on the hosted side and wanting to take a big loss and use that loss against their active income on a W-2 or 1099. So that's like what I see a lot. But the pitfalls to watch out for are making sure that if you're expecting to take a certain loss, that you can actually take that loss within, a certain, not being too aggressive, or if you are going to be aggressive, make sure you understand the IRS might come in and disallow that loss. And then to your point, I mean, this is always the hardest thing. It's not really even a tax matter. It's more so like, well, what does the Bitcoin price do over the course of the next 5 years with all the swings? I don't know that. And I definitely don't know what the hash rate is going to be doing as well, given the efficiency of the machines that you're going out and getting. And so there's just, at the end of the day with mining, there's a lot of variables. And I'm not really the one to be talking about all those other variables. I just know on the tax side, depending on the actual economics, we end up having to potentially sell more Bitcoin than we were planning to sell to cover obligations, taxes. And then the last thing I'd say is making sure that you end up doing something over the course of several years. Not doing it all in 1 year is something to look out for as well. Take this example. you want to go put, $1 million into Bitcoin mining machines. That's the total dollars that you want to deploy. Well, if you do it all in 1 year, depending on when you do it in the year and how much Bitcoin you're earning, the high level is like, well, you might have a really great year in year one from a tax perspective, but then when you go out to years 2 and beyond, especially if you did classify it as active income, well, now you have, net income most likely that you have to plan for taxes. And especially if you're just an individual that's doing this strategy, if you have net income and you've marked it as active, you have income taxes as well as Social Security and Medicare taxes, 15% on top of your normal income. And if you're already in a high bracket, that can be something that you end up paying a lot of taxes on the net. So long-winded. Hopefully that answers your question, but that's kind of a few things I've been seeing out there.
Wow. No, I mean, that's super interesting. I mean, honestly, I feel like I'm talking with my dad, because it's always like these. Well, he talks in like this jargon. I'm just like, okay, yeah, sounds good. Capital gain. I mean, I know like long term, short term. That's about the length, and I know I get a deduction for my mortgage interest and things like that. But then he starts talking about like carry forward loss and all this other stuff. Like things get suspended. So when you said like your first year is going to be great, but then your second year, well, if you took it all in your first year, well, sorry, you're screwed, type thing.
Right.
That being said, like, what would you say to like a lot of the new miners out there and people joining the party now? Like, things have really changed since since 2014, when they first talked about Bitcoin being property, to now.
Yeah, I mean, so I would definitely say just start early and get your tracking in order. Whether you hire a bookkeeper on Fiverr or whatever you want to do, but just make sure it's actually being looked at. The amount of people, and this applies to all business owners, not just Bitcoin miners, but the amount of folks that we come across, and they want to do planning, they want to know what they're like, how can we be as efficient as possible on the tax side, and we have no records to really, or at least we don't have clean records to know, okay, this is exactly, they can send us over, a lot of CSV files, but then there's an additional cost to compile that into like useful data. And so that's what we've been talking with a lot with clients, is like, even if it's something as simple as like you get a payout from your pool, once a week, once a month, whatever it is, like, still, let's just go ahead and lay the groundwork to get that all set up. We've been setting people up all year in Bitment to link up their wallets, link up their bank accounts, have all of that go into one system, and then show them how to categorize it from the P&L side and the tax reporting side, or some of them, if it's a big enough, project, they've just engaged us to do that for them. So that is kind of one piece. And then and then the other piece that kind of goes along with that, but is if you are going down the path of trying to justify being an active participation business, especially if you're going a hosted route, you really need to dial in the documentation, time logs. It's kind of I would say it's a big deal, especially if you're looking to try to take some substantial losses against active income. You want to have an ironclad, justification for saying, hey, this is active, if the IRS does come knocking. And again, like the IRS, they're kind of neutered right now, and we're in an administration right now that is a bit more friendly, but that can change. And if I had to guess, that is going to change, just given how politics swings. And so we're telling clients, like, yeah, even don't think about what you feel now about how politics feels and how the IRS feels. Plan for 3 to 5 years out, where the administration might flip over. They might go print a lot of money and push it into hiring IRS agents. So,
yeah. So I saw a vigorous debate break out over the weekend on Bitcoin X about how the price has drawn down, right, since July. October, 126K. Now it's 89K, and the tweet said something like, did you know that you could just sell your Bitcoin, buy it right back, and then take the loss? And then there's a lot of back and forth in the comments about fraud, wash sale rule, like a lot of back and forth on that. And can you set the record straight for us on like the wash sale rule, and is that actually a legitimate strategy to harvest losses?
Yeah, what the folks who argue the other side will always come in and say is they will concede the fact that the IRC 1091 does not explicitly call out digital assets. So technically, yeah, Bitcoin is not covered under wash sale rules. Now, what people come in and reference is like, they'll make the argument that, well, if the IRS came in and by the nature of what they see you're trying to do, they understand, like, I guess I don't know the exact word that I'm trying to think of. Like they understand the nature of what you're trying to do. And so I've heard some arguments on the other side that would say the IRS would come in and on that merit, they would disallow it. Our stance has been really, if you go back, and actually I'd point people to an article I wrote on the Satoshi Pacioli.com. It's spelled, it's like everyone knows Satoshi, how to spell that, but Pacioli.com. So it's SatoshiPacioli.com. We have a Substack. I wrote an article, basically laying it all out there if you want to go in detail. But what it comes down to is Congress would need to explicitly add digital assets into the language of IRC 1091, and then Bitcoin, you would not be able to do it. But for clients that want to do it, generally we're saying, one way to make sure that you that you cover yourself is maybe you sell on one platform, you buy on another platform, for example. All that say, you should definitely probably do it under the guidance of, again, a tax professional to make sure that you're covered. Because there are some nuances.
Yeah.
Okay. So, we've touched a little on some of this, but, considerations for miners that are, immediately selling versus holding. What are your thoughts, on that front?
Yeah, I mean, if you're immediately selling, so we've seen this with some of the miners we worked with. It's like, okay, we know we need to sell roughly 30% of the Bitcoin we mine in order just to pay our utility bill every month. And I've even seen it now where some of it's like real time. You're paying your utility bill actually on a daily basis, which is really interesting. But I really like the strategy of selling, strategically selling on a more frequent basis than monthly.
Yeah.
The one thing, I mean, it's almost like a DCA backwards, right? So you're smoothing out the volatility. But from a tax perspective, you're not having these large swings between, I sold this and I have to capture this gain or capture this loss. There's additional taxes on all of that. So versus just selling, again, in that case, you'd have to be using something like a LIFO. So that's specific identification. But assuming you have the record straight to justify using that, then selling throughout the month, I think is generally a better strategy than waiting to try to do it all in 1 month. So
awesome.
Is there anything coming up in 26? I mean, you see the Clarity Act, and you see discussion of a de minimis exemption. For stable coins of all things now. So like, is there anything that's significantly on deck to change in 26 from your perspective on this front?
It's a hard thing because, I know Lummis really tried to push the de minimis rule inside of Big Beautiful Bill. And to be honest, that was our best shot.
Yeah.
We turned the corner this year. We're going to blink and we're going to be at the midterms. And assuming things happen how they normally happen, at least the House flips, and then it's basically a stalemate. And so I'd love to say I'm bullish that we're going to get something de minimis. if you talk to the guys over at BPI, which we actually just hosted an in-person event, partnered with them in Nashville to give a policy and tax update for the year end. We actually should be releasing that video. Maybe I'll get to it today. I have the video, just need to put it out there. But yeah, they sent actually one of the top advisors from Blackburn's office down, and he spoke to it much more intelligently than I could. But the high level is, yeah, from a Bitcoiner standpoint, we want de minimis. We want to go high on that, and then we'll anchor high, and then we'll meet them much lower, or maybe meet them in the middle. So maybe we anchor something crazy high. I'm not going to throw out a specific number, but way higher than $600. All that to say. So that's one piece, and we would love to see that. When I originally set out to build Bitment, it was actually strictly for the accounting software standpoint, and we actually weren't going to do anything with tax and cost basis until everyone we talked to was like, well, you have to do that. So we ended up adding it in a little bit later on. So, but it would make our lives much easier on the tax firm side, on the software side. So I'm cheering for that all the way. The other big piece from a mining standpoint that I'm sure your audience is well aware of is we're still, I mean, again, I'm in talks with as many folks in Washington that will speak with me, which is mostly at this point BPI, good partners of ours. But we're trying to get the mining revenue to be treated the same as any other commodity. So, when you go, mine gold out of the ground or pick your favorite commodity, you don't have to pay taxes on that from an ordinary income standpoint when at the time you pull it out of the ground. And so we see that as a bit of a double tax and overburdensome reporting that is, put on the mining community. And so that's kind of one other thing that we're pushing for to see. But from a realistic standpoint, I don't know. I mean, we will just kind of have to see what gets across the finish line before things potentially get shaken up in the fall. So.
Well, yeah, and Lummis just said that she's hanging it up. So she's hanging up the jersey to. I mean, that stinks because she was a big advocate on the crypto side, and
yeah, I'm torn on it. I mean, a big part of me is like hats off to her.
Yeah,
serving one term and then getting out. I wish all politicians either did that voluntarily or frankly were forced to do that. We will lose a big advocate in the Senate with her leaving. I guess, as Bitcoiners, it's like, okay, well, now that there's an opportunity, now go, a new young leader needs to go step up in the state of Wyoming, run for Senate, and take that seat and do
right,
and basically follow in her footsteps would be my call.
Right, and like the problem is not many people are going to step up to fill those shoes, because I mean that's a lot of work. Like it's not an easy role. I mean, you got to put up with a lot of bullshit, to be blunt. Like it's just a lot of politics, no pun intended. But that being said, like, so Jordan, tell us a little about what Bitment does, things like that. And if people are looking to if they're interested in talking with you, where would they go? And how do you guys compare to other tax platforms that are out there in the market?
Yeah. So yeah, you can go sign up for a free account today. You can try it out. It's just bitment.co, spelled Bitment. Yeah, I mean, the main thing that I saw as a big gap in the market was that all of these tools, I would say most of my clients were using cointracker.io, if you've ever used that.
Yep.
And it was essentially plug in your wallets and then like hope for the best, like hopefully everything's in, hopefully there's no duplicates. I mean, I would have clients that would be like, they'd be trading, a couple thousand transactions a year across multiple coins, and like it was one of those things where it's like, well, do we have any good way to reconcile this? Do we have any good way to make sure that it's not showing any duplicates, it's not showing anything, or not leaving anything out? And the honest answer is there's nothing really to do that well. So actually where we started with Bitment was just building out Bitcoin bank statements. So
You just got to
So
keep
build it
paying the
up.
power company. Speaking of which,
Yeah, I know. Yeah, it's my bid axe, or my 5-bit axes over there. It's pulling it out. I'm just kidding. So yeah, we started with Bitcoin bank statements, which is like such a boring business. I guess that's why no one had started it yet. But I needed something as like the source of truth that I could then reconcile against. And now with all these loan products and people wanting to, you know, they're trying to integrate Bitcoin inside of their traditional financial plan. The statements has actually been a very interesting piece, whether it's, you know, the audit firm coming in and saying, hey, we need records to justify all these payments. Okay, here's a bank statement. And they're like, oh, this looks like what we would normally get from JP Morgan. This is great. We can put this in our records. This works. So there's kind of that piece. And then the other big thing, like to your question about like how does a user interact with it? Well, you plug in your wallets, you add memos. For mining companies, it's very straightforward. It's like, well, this wallet is where all my revenue comes in. I send it over to the spend wallet. I need to sell some amount of it, you know, and maybe I have a bank account, maybe I don't. It's very straightforward. For businesses that are integrating via like Zaprite or Square, and they're taking it as payment alongside fiat, and then they've got dollar liabilities. You know, it's a bit more complex, but so some people are using it as a supplemental tool just to show their Bitcoin activity, and other people are like they're canceling their QuickBooks and CoinTracker, and they're just using it as their full accounting tool. So, and then I'd be remiss if I don't plug this as well. We actually we spun up the Bitcoin for Financial Services Summit this year,
oh
and
nice.
I assume your audience is not, you know, maybe not a ton of CPAs, financial advisors, but I'm sure they know some. And the whole idea behind that is I talked to too many financial advisors in the TradFi space and accountants who are just not, you know, they're just not up to speed on what Bitcoin
Yep.
is. And so we spun up that brand. We had an in-person event at the Space out in Denver, Colorado, and there's about 150 advisors that came out that way. But yeah, we started a podcast. That's what I was recording right before I came over here, and so yeah, we're excited about that brand. We're really trying to just educate advisors, you know, tell them how they can, you know, intelligently build Bitcoin into their practice. And so yeah, that's just BFFS media is that website if you want to check out the podcast or sending your advisor to our event next October 2026.
Yeah, where's that going to be?
It's at the Space again. So it'll be the Space in Denver, Colorado.
Nice. Yeah, we'll have to definitely get you back on before then. But
Perfect.
with all that said, you know, we got about a minute left. If people want to reach you, where should
Oh,
they?
yeah, you can just I'm Jordan Guess, Guess at you know, on Twitter, X. I'm on LinkedIn. You know, the DMs are open. You can I guess my assistant will kill me if I give out my actual email. But if you want to hit like contact@bitment.co,
Yeah.
we monitor that. That'd be great. So, and you can sign up on the website to get a demo of the product. You can, like I said, you can sign up and just plug in your wallets and try it out for free as well before you have to pay for anything. So,
Oh, that'd be great. Well, Jordan, thanks for coming on today. Matt, anything on your end?
I just wanted to ask Jordan. You mentioned earlier, you know, maybe a merger that's coming up. Is there anything you can
oh,
say about that?
sure.
And anything else you're looking forward to in 26?
Yeah. So one of my favorite things about Bitcoin is you can just do things. So I joined up at the Bitcoin Park in Nashville in January, met Rod Rudy down there, and then I was at the the Nashville Energy and Mining Summit, which is coming up. I don't know if any of your audience is going to be out there. If you guys will be there, I will be down there in January. Um,
Nice.
I met Joe Wood through that event. Joe runs a CPA firm out of Nashville called Satoshi Pacioli, and my firm has been, you know, it's always been Trusted Advisor CPA, and so we met and we kind of hit it off, and yeah, I would say in July this year we started really talking much more serious about merging our firms and our teams together under one roof, and yeah, we've been working with a Bitcoin focused attorney out of New York. He's been drawing up all the paperwork, so it's all going to be done going into January 1st of 26. We'll have 11 full-time folks, and we do a mix of tax and accounting outsource CFO work, all that kind of fun stuff. So yeah, it's all fun stuff. That website's just the SatoshiPacioli.com. And there's a contact us form on that site if you want to get in touch with us for tax services.
That's fantastic.
Awesome. Well, congratulations.
Thank you.
Yeah,
Appreciate
huge congrats to you, Jordan. That's great to see the continued growth, and we'll definitely be bringing you back on because I guarantee there'll be some good stories on the tax stuff over time as things progress. And we will be back next Monday with another guest. But that being said, everybody have a great holiday, and we'll be back.
Sounds good. Thanks, y'all.
Thanks, Jordan.
Yeah.